Good morning, traders. This is Wilkey with StartupTrading.com. It is 8:46 a.m. Eastern Time on Wednesday, July 29th, 2020. This will be FOMC Day. So we'll look back yesterday real quick. So I mark anytime I see trades go off on the indexes above the high of the day for the bell or below the low of the day for the bell. If trades go off there before the session closes, an hour later, I mark it whether or not it closes in that range or not. I still mark it as you know, traders out of position. So we had that on Monday where traders paid above or traded in location above the bell high Monday before futures closed an hour later after the bell. So as we look at that, we had that on everything except for the Dow. And as I said in the morning broadcast yesterday, if we couldn't get over that range in the first 2 hours of the day, that likely that would be resistance in the afternoon. So as the NASDAQ never did even print near that during the bell session. So as we look at it, you can see in the afternoon, tried to get up above it again for the ES and again for the Russell, and then they just ran away from it because it was too late in the day. They couldn't do anything about it. It was just a liquidation break, no big deal. And if you look at the overnight value areas on the bottom right, we're holding basically for everything the overnight value area, and you can see that's starting to slip away, value area low. And as that did that, that was when this liquidation break came in. These are on different time frames. This is the tick chart on the bottom. So enough about yesterday, on to today and tomorrow. So we will have, and I don't know what time it is, and I don't really care, but I know what's going on. So sometime today, and I may just tune into some local listings to check it out, we're going to have the tech giants testifying before, one of the committees at Congress. So that could, move the stocks a little bit up and down, but since they are the biggest weighted stocks in the S&P 500, the Dow, and the NASDAQ, it should move them, if they do, a little bit more, with the NASDAQ taking the brunt of whatever action happens. So as one of the members of the room, John, pointed out, Facebook's earnings got moved from tonight after the bell because of this scheduling conflict to tomorrow after the bell. So tomorrow after the bell, we're going to have Apple, Amazon, Facebook, and Google all reporting. So you can just tell, and Apple, just so you know, will not report their earnings until after 4:30 p.m. Eastern time. These other three will report between 4 and 4:15 more than likely. So keep in mind, if you're playing in the futures between 4 o'clock and 4:15, Apple will not be part of that, but the other three most likely will be. So as we look at these earnings, it depends on, the chances of them all going the same way are slim, but they are possible, right? They all could, be very good or very bad. You would expect Amazon to be very good on earnings with all the COVID packages being sent. But, with everyone shopping from home more, if, anyone's not going to, anyone that's not shopping from home during this probably is never going to shop from home unless all the brick and mortar stores close down. So good for Amazon. But what it'll be for Amazon is what they think guidance is going forward, right? So they could have an awesome quarter and then say, but we don't see next quarter being as good as this quarter, and that could drop the stock. So keep that in mind. Anyways, and it doesn't matter what they say or what the expectations do. The charts will let you know what happened, right? But keep in mind that this is going to be very volatile. And this is also going to make Friday probably a little bit more rangy, potentially. And now if they split and mix the bag right, some of them go one way, some of them go the other way, then more than likely, it'll help, stabilize it. It won't be a trend up or a trend down that's massive, but it'll still be very choppy. So keep that in mind. That is now tomorrow after the bell. As far as I'm concerned, this is a bigger news event than the FOMC is today. So we'll see what the market thinks. We have been in a very tight range, right? We got the FOMC press conference starting at 2:30, and it will not end until JP or Jerome Powell stops taking questions, and that could be anywhere from 5 till 3 until basically 20 after 3, whenever he's done. That's where it goes. But the market will still be digesting that. We'll be in the witching hour, the final hour of the closing. So you've got a lot going on today. So I expect you can split the week, is what I was saying, from before 2 o'clock Wednesday to after 2 o'clock Wednesday to Friday's close. So we'll see what's going on there. Tomorrow morning, also before the bell at 8:30, you're going to have advanced GDP, which is can be anywhere from a 1-star event to a 4 red star event, right? So this can be a market mover, and it can move the markets more than the FOMC does as well from time to time. So keep that in mind, that this is when things start heating up. All right, with all that said, let's look at today and what could possibly go on today. If we just look at the level 4s for today for the S&P 500, they're basically at 3156.50 to 3270 is where they are. So if you look at 3270, that doesn't even take us up to last Thursday's high before we had the breakdown in the overnight session. So that doesn't even get us up there. It gets us right around to Tuesday's, overnight high and bell highs. Right in that zone is about all it takes us to. Now, about 7 trading days a year, you close substantially above these levels or below these level 4s. But that's nothing that you should really take into account that you think today's going to be that special day. Today's more special than the rest, because it probably isn't. So even though we have the Fed speaking today, we are waiting right on those earnings tomorrow. So I think that if we do pop above these levels, right, we're likely to close very close to them. We could close an inch or two above or below, but more than likely we're going to close within these ranges. So keep that in mind. That's where the money is inside of this range. So as we look at Thursday's breakdown and we zoom into this chart a little bit more, so I've been watching 3171 basically as one of my support resistance lines in the sand. Since we broke down last Thursday, we have not been able to trade below 3190. We haven't been able to even get down there, and we haven't been able to, during the bell session, get anything going above 3235 half, right? So as I zoom in now to today's action, you can see this is what I'm talking about. So we got that distribution, right? We tested it in the overnight session, in the previous session, didn't get up there in this session at all, right? But that's going to be right around R2, and then you got above there that we could, between R2 and R4, that we could, range if we, do pop up. Keep in mind, with as much as we've stalled around here, most likely we need to trade these, 3190 levels and potentially even test a little bit lower. And the market likes free money. It doesn't like when Congress argues. When it sees free money on the table and it sees someone trying to take it back from them, the market doesn't like that. It usually throws a little pity party, tries to scare Congress into bending at its will to give it the free money that it wants. So if these are scare Congress levels is what I call them. So I think we'll trade back down to this, if that goes onto the table, right around 3105 to 3115. But I can see, since we had nice references there the previous couple of weeks, we have not traded down to basically 3080 is where I think we would need to go to 3060 to really, and we'd have to do it, fairly quickly within a session. I don't think this is going to be that session, but keep in mind that that'll scare Congress if that indeed happens. And now, once we get past 2 o'clock, which is probably what's going to happen, right? That's not going to happen before 2 o'clock today that we're going to do that. So more than likely, we'll have to see what Amazon does. But expect these bigger levels of support to come into play in the near future if we can't get up into this upper distribution and start popping, right? We've been sitting here consolidating for a long time. So we beat up the S&P 500 pretty hard here. So let's look at the overnight action. Basically, and this is ranges that I would expect. So we talked about the distributions for the S&P 500. Let's look at the Nasdaq. They've got those split distributions. Basically, there's one that runs from above yesterday's high up to just above R2 at 10,724, and then above R3 at 10,770 quarter is another distribution, but that's between R3 and R4. You're unlikely to really get a catalyst that's going to go up there and hold it up there, especially with all those earnings that we've mentioned tomorrow. So as we look at it, makes sense to maybe test a little bit lower. I've got a level marked at 10,377 quarter down here that could, potentially interest some people. If we look at the overnight lows, these green dotted lows, below yesterday's bell low, but barely, and the other two were below yesterday's bell low as well. Looking at the overnight highs, in the middle of value, at value area high in that zone, in the middle of value, actually below value, in value area low for the Russell. So as we look at what's going to shape up and things today, so today I expect before 2 o'clock, with some exceptions of headline risk coming out of these big tech giants, just the same choppy range that we've been in. Don't expect this 30.90 to get repaired or trade, and don't expect us to get anything going above 32.46. If we do pop into the zone, expect it to get rejected again, anything before the Fed. We're just range bound and waiting on news. So I'm really not going to get into all the other things that we normally look to. I think that today is going to be, about the Fed. And quite honestly, with everything going on tomorrow, the Fed could even be a snoozer today. We might get a little bit of pop and volatility, but it might not have enough to break this range. And I'm considering this range like, below 32.46 and above 31.90. So you can look at your other technical analysis. If you see those levels starting to break and be breached, you can look at other plays and continuations or failures, depending on your slant and what you want to look at it for. But make sure you're at least taking, 2.5 to 10 to 1 risk to reward trades. 2.5 to 5 is a sweet spot. And if you're not getting that, and have your stops placed on the server, because if we come down to this 30.90 and suppose that is a late day sell-off that we get, we're unlikely to respond from that during this session. So if you're hodling and you don't plan on holding overnight, and plus if this holds and then they want to scare Congress tomorrow additionally before those earnings come out tomorrow night, we could drop another 80 points from there pretty easily. I hope this helps. You guys have a great day, and I will talk to you tomorrow.